Hello everybody, it's me, Trader Max, and this is DexFXMarkets.com. In this video for the Dex Atomic X, we're going to talk about the low and high risk. Now, in the previous video, we talked about low risk and high risk, and we also talked a little bit about a medium risk, which we'll also talk in a future video here soon. But for right now, we're going to talk about what's out of the box here on this low high risk setting. Now, we know that the high risk setting is always the very first deviation within the mean box or the HILT box itself, right? So if this is the mean, this is the high mean, right? So this is a high quarter mean, which is a quarter, right? 1/4 of this. In between is called the eighth, right? Now, we can play on that eighth, or we can come up a little higher or a little lower depending on the box itself. We can use that within our medium structure there for risk. But for the low and high risk system, it's very simple to understand. If you go with these, it has its own success rate depending on the pair and the time and the session and all that kind of good stuff. Something that you're going to have to find out. If I try to do it on my side, that'll be a lot more information that I'm going to have to build, and you won't be paying a small little penny like $50 a month or $100 or even $200 a month. It would be quite expensive to have the strategy and the data system for that. So to keep the cost down low to you, there is some work that you have to do. If you're going to be utilizing the low and high risk means actual, okay, and not somewhere in between, then you have to understand that price that you're going to be using, how does that transfer over to Nadex? Now, for the most part, when you're utilizing this price structure for the statement on a high risk, on any trade, whether it's high risk or what have you, if you're going to be following the actual, stay with the actual, okay? If there isn't a price over for 21.09 on the USD Mexi over on Nadex, but there is one for, say, the 2110, you're moving what we refer to into the trade, okay? Into the trade. We don't want to go into the trade on a buy, right? So on a buy, you would be going up into the trade. We don't want that. We want to be moving outwards. Why? Because moving inwards gives you less of an opportunity to win. Now you're even higher risk. The more you go into the trade, the more risk there is. The more that you go out, the less risk there is. Okay? Now, if you got a lot of experience and you know that in this particular incident, we're looking at this level right here is a pretty, we know that this level right about the top eighth mean here is very strong. Okay? So we know that that's pretty strong, and you might have already been bought into that trade at that point, right? But we also know that pullback and is pretty strong to be at that area as well. And if it does fall down below, what happens to support and resistance that you probably learned from previous videos, that once it becomes the other, right? One line can either be support or resistance, depending on where the price is at, it becomes a strong value. Okay, so if that's a strong value there and price drops down, it goes from being support to being resistance. And if it's choking up against this moving average, it'll probably give you a little bit of an issue. So these are things that you start to look at. How close is my quarter mean to my moving average? How close is my quarter mean or my high risk to another level of bounce back, right? So where is the other level of bounce back there? That's only, and again, we're on a 5-minute candled time frame here. So 2109, and that's 2111. That's only 2 pips. That's not very much. That's not like a giant spread that you'll be working with there. Okay, so keep that in mind as you're making these decisions on which one to be able to use. Okay, there's some people that like to use the low risk because it has a bigger pullback. Now, keep in mind the process of that the more high risk trades that you do, the more trades you're going to have to make, the less wins you'll get. Okay, but you'll end up working it out basically if you do low risk, because there'll be less trades. You'll win more, right? Because you'll have to trade more but lose more on the high risk, and you could win more but trade less on the low risk. So it kind of works its way around. Why the preference? That's completely up to you. There's even some people that use the hybrid of the medium risk. We might end up putting medium risk in there later, but for now, this is what we're going to have. So, rules of thumb. 1, pick one. Which one do you want to use, high or low risk? 2, you don't have to use one throughout all your systems. If you find that the AUD USD is more volatile at night between 8 and 11, you can shrink it down, create an alert for the 8 o'clock at night. If you have a premium account, you can have over 400 alerts, and each alert is unlimited notifications. That's pretty strong. We'll talk a lot more about alerts later. But right now, you can have a, listen, if you're gonna be here for trading, you're gonna spend some money. You should be spending some money for your tools. You shouldn't be looking for free tools. You shouldn't be looking for the easy way out. All right, some good advice there. So if you're choosing the high risk, make sure that when you're choosing your Nadex, don't come into the trade. Now, also keep in mind that the Nadex process has a indicative price, which is about 2 pips higher. Okay, but it kind of works its way around. I don't give that too much thought. I look at this line at 2109 as the ability to say 2909 over on Nadex. Okay, and I hope the price will reflect that. When I'm doing sells, the same thing. I use the, if I'm doing a sell, I use 2909 or whatever it would be if it was a sell at this point. I use that over on Nadex. And if there isn't one at 2909, 2908, 21.08, 0.7, 0.07, 0.06, those would work more for me. 0.10 wouldn't. Okay, so keep that. Even if it's like, oh, well, it's only 1 pip. Listen, we're only 1 to 2 pips from here from each one of these versions here. So that's 10 and that's 12. That's only 2 pips difference in between each one of these. You see what I'm saying? So the averages of 2 pips isn't very much. All right, and this swing right here was 2 pips. This could be at the end of the trade. You could be, if it didn't get picked up, usually within 2 pips, you're going to get picked up on the trade. So this one would have gotten picked up. And you would have won so far. I mean, we got half hour left still. But I'm seeing it's still pretty good. All right. Now, in the low to high risk setting, it's very easy to get flip-flop back and forth to figure out which one. Practice, practice, practice. In future videos, I'm going to show you how to use the replay button to kind of help you get to that really, really super fast. So you don't have to wait for an hour. If I trade this, I'll wait for an hour to see if I win. You can find out in a couple of seconds. I used to have you trade 5-minute trading before to do that. Now I'm so excited. I don't get anybody addicted to 5 minutes. I feel like a pusher. All right. We'll see you next time. I'm Trader Max. This is DexFX Markets for the Dex Atomic X series. And I hope you got something out of this one. We'll see you in the next video. And as always, trade well.